you know what? You're actually going somewhere, and you probably will get to your destination, but you're gonna actually get jerked around by the storm, and it's gonna be a fast ride, and you have life, and you have an opportunity because you've harnessed a new energy source, and the old strategy was gonna kill you.
In recent years, the financial landscape has undergone a paradigm shift driven by the emergence of Bitcoin and the crypto ecosystem. Michael Saylor sheds light on this significant shift and its implications for investing, the crypto and stock market, and the global economy. The past year witnessed institutional adoption of Bitcoin, marking a maturation of the asset class and a surge in public interest. This move towards digital property is driven by the need for a hedge against rising inflation, a recurring phenomenon in history that erodes the value of traditional currencies. Saylor emphasizes the importance of recognizing Bitcoin as the dominant network, with its overwhelming support from smart, influential investors that gives it an edge over other cryptocurrencies. He doubles down that Bitcoin boasts an unmatched resilience and decentralization, and stands as an unstoppable force, resistant to any nation-state interference. As trust in institutions wanes, investors are turning to this new form of digital property. Saylor points out that even amid market turmoil, Bitcoin has outperformed most other asset classes, suggesting its resilience against economic turmoil. As the world grapples with inflation, shifting market dynamics, and diminishing trust in traditional institutions, Bitcoin emerges as a safe haven, reshaping the way we approach wealth preservation and investment. Let's get into the latest interview with Michael Saylor, as he discusses Bitcoin's role in 2023 and how it will revolutionize the entire crypto ecosystem. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
I think that the highlight in the past year is the institutional adoption of Bitcoin and the maturation of the asset class, along with the education of millions and millions of people as to why they might want digital property, what is a digital commodity, and what's its place in the macro economy. So every decade, there's some profound paradigm shift. And the thing that hits you about a paradigm shift is it's such an out-of-the-blue idea that no one can conceive of why you would even want it. Every financial crisis we've had, right, in the history of the world, and we've had 10,000 of them. There have been 10,000 currency collapses. Along comes Satoshi, and we've got the white paper, and January 3rd, 2009, we launched this little monetary virus or this idea virus, and it kind of burns very, very low level for a while, and people aren't sure of it. It's a gimmicky thing, and it gets bigger and bigger and bigger, and we're waiting for why would you need it? And you had to be a visionary to kind of need it or get it. If you lived in Argentina and your currency collapsed and you watched your family get wiped out, then maybe you get it, but that wasn't the mainstream, right? The Western world is not run by people that lost their family's life savings in Africa or South America. So it was an interesting idea, but it was a fringe idea until 2020. And in 2020, the monetary inflation rate tripled in the US. And what we saw was in the world's best economies, you're losing 15 to 20% of your economic value in the currency every year. In the second tier economies, you're losing 30% or more. Like the Japanese yen is down 24% against the dollar in the last 12 months. And in the tertiary economies, you're losing 50, 60, 70% of the value in the currency. Bonds, for example, are down 20% in the same year where stocks are down 20%. Okay, so that never happened for 20 years. So why does that happen? Because when you drive interest rates to zero, if you can't drive interest rates negative, then there's no way to get bonds to go up. So what we've got is the 60-40 models are broken. Conventional ideas like, oh, I'm just going to store my value by buying property, that's kind of broken in a lot of places. People are losing faith in just investing in property when you see the gyrations of this property. The conventional idea, I'm going to buy S&P index stocks. Well, the S&P is slightly up. NASDAQ is flat over the last 2 years. It blasted up and then it blasted down. So what you've got is a lot of people questioning all their premises, and rising through that chaos is a new idea. And the new idea is, what if I can encrypt energy? What if I can encrypt money such that nobody on earth, no government can debase it, no corporation can steal it? I don't trust anybody. People don't trust governments, right? We're at an all-time low in public trust of institutions. It doesn't matter what government. And they don't trust companies. And why? For good reason, because companies are influenced by governments, right? So there's a lot of lack of trust. So if I can't trust that, then what can I trust? Where am I going to put my money? Here is what's happened since August 10th, 2020, when we adopted Bitcoin as a treasury reserve asset. Bitcoin is up 65%, and MicroStrategy's bought almost $4 billion, not quite, but nearly $4 billion of Bitcoin. MicroStrategy stock is up 66%. So we are tracking slightly ahead of Bitcoin. So in terms of asset classes, the crazy volatile Bitcoin is the best performing of all those major assets. And then you can say to yourself, well, I'm just going to invest in stocks. Okay, let's look at big tech. Google's up 37%, Amazon is down 22%, Facebook is down 45%, and Netflix is down 52%. MicroStrategy, little MicroStrategy, no one ever heard of, up 66%. Would you have guessed that a mid-sized software company, low-growth mid-sized software company nobody ever heard of, would outperform Google in the last 2 years by a factor of 2? We compete against companies 100 times as big as us. Oracle, 100 times bigger than us. They're up 25%. Okay, so what is the lesson of that? The lesson is we're in the middle of chaos. There is no place to hide. You've got the government embracing crypto assets, Congress, senators getting educated on it, the CFTC, the SEC getting educated on it, big institutional investors starting to take Bitcoin positions, the media. Now you've got Bloomberg covering crypto, you've got CNBC covering crypto, you've got an entire world, media, analysts, politicians, and they're all starting to figure this out. But I still say we're early, right? This paradigm shift takes a decade. And maybe the first decade was the embers of a flame flickering from 2009 to 2020. And then from 2020, we started pouring gasoline on that flame. So I still think Bitcoin is the most scarce, most desirable, highest quality property as a long-term store of value.
The traditional investment landscape, as Saylor asserts, has been shaken by economic volatility and uncertainties. The conventional wisdom of relying on bonds, stocks, or property for wealth preservation has come under scrutiny due to unprecedented circumstances. As central banks drive interest rates lower, the effectiveness of the 60-40 investment model is questioned, prompting investors to seek alternatives. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Saylor asserts that this journey is just beginning. The impact of Bitcoin is expected to continue shaping investment strategies, challenging traditional norms, and fostering a new era of financial possibilities. What do you think about the latest interview with Michael Saylor? And what are your thoughts on his insights into the paradigm shift driven by Bitcoin's emergence and its impact on crypto investment strategies globally? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.